Hi traders, welcome to another video with me. Today we are going to go slightly educational and I want to give you 5 trading tips that I really think everyone should know and ideally follow. The first tip is that don't overcomplicate your trading system, because a lot of traders really like to have too much fancy tools on their chart. You look these two charts, one on the left have a lot of indicators and one on the right have none. Definitely, I can't say that I highly recommend using the chart without any indicators, because indicators are helpful, but seeing too much indicators without you fully understand how to utilize all the power of them is a waste of time. And let me explain you that a little bit better. First of all, in the market, you can analyze a few things. You can analyze price, you can analyze time, and you can analyze volume and the entire volatility. Now, on the chart on the left, we have a lot of indicators that all analyze one thing, and that's the price. So you are wasting, let's say, 5 to 10 minutes reading the chart that can give you two different signals and they analyze exactly the same thing. So if you just reduce that amount of the indicators to, let's say, one indicator, or let's say even two top, that analyze price, I would be fine. And that's fine to use. But if you have more than two indicators that analyze the same thing, that's a waste of time, and for a lot of traders that can become confusing, even for me that trade for a long time now, seeing, let's say, this chart and reading the data from all the indicators can make me slightly confused, because some indicator will tell me, okay, we are in the downtrend and we should continue that downtrend. Some of them would tell me we are in a downtrend, but there is a reversal coming. I'm not sure which indicator to trust. I'm never going to be able to open a trade. So it's definitely better to start thinking how to pick up the correct indicators instead of using every single indicator that you find on the market. The next tip is always try to have a backup plan. Market won't always go your direction, and that's fine, because that's a part of this game. We can't always make money, but what is important is to always be ready for the worst scenario. So, for example, when I started to trade, my biggest mistake was that I waited for one setup all day long, or even more than a day, but my setup never came through. For example, if we see this Euro USD chart, and we can easily say this is the downtrend. So if we just throw a simple trend line to give us that potential resistance point, and I would in my head say, okay, I'm going to look for a pullback short positions here. So that would be my primary plan. But in case price break that trend line, I would still wait for that short position, or I wouldn't know what to do. So it's much better to say, okay, have that invalidation point. In this case, our invalidation point is the breakup of the trend line. And if that happens, we can easily start thinking that price can return to the previous high at least. Of course, there can be used a lot more different tools, but it's just idea what you need to do. So always be prepared for both scenarios. This way, even if your primary trade don't play out, you still have a chance to make some trade during that day. Okay, there will be a days when, let's say, both plays won't really work out, but you had a plan and you tried, and that's what counts. But if you every day go with the plan, okay, this is downtrend, I only want to short, and price is just moving lower, lower, lower without giving you any pullback, so any chance of trying to get into the trade at a good price, you would waste a day, week, or even a month waiting for something that really never will give you anything good. So always try to have a backup plan. Learn to trust your trade is the next tip I really want to talk with you. Either you found yourself to be cutting the trades too early or letting your losing trades to ride too long is the common problem, but both problems come from the same thing. That is because you don't trust your trades and your ideal plan. If we use this pound dollar chart and we say that we entered the short trade at the marked point here, so we know that we entered the short trade. Let's say we have the stop loss at 134 and our target is slightly lower, so let's say 130.50. And we see that we never reached that take profit and price is moving higher. Now, at this point, a lot of people would either cut the trades just because they are afraid to hit the stop loss, or they are going to raise their stop loss and pray that market is going to turn their way. What you should do in a situation like this is that you need to get back to your original plan and see why you really entered the trade. Because for every trade, you need to have a reason. So if I know that I wanted to target, let's say 130.50, and I know why I wanted to target that level, so I would hold the trade and I wouldn't adjust anything because I had a plan. And while my stop loss is around the normal level, so if I even lose the trade, but my risk per trade was, let's say, 1% only, I know I can control my emotions. But a lot of new traders try to risk a little bit more than a 1%, like 10 or 20%. So once they get in that situation and market is making a pullback and they are starting to see their stop loss being hit every single second in the head, they are going to start panic and do the wrong thing. So you need really to start believing in yourself, because you are the one that entered the trade. No one told you to enter a trade. Maybe some guru told you to enter a trade, but that's not the real way how to trade. You need to make your own decision. There are no shortcuts here, and you're the only one that's responsible for your account. The next step I want to give you is that you should prepare your day in advance. And what I mean by that is simple, that even I did that mistake a lot of times. Like, I wake up at, let's say, 8 a.m. and I start trading at 9 a.m. without any plan what I should be trading. I just start and searching for buy or sell signals in the market. And usually that never ends great, because either I'm going to end the day with a, let's say, break even or with a small loss. But using no plan really never gave me any profit days. And it's much easier if you, let's say, make a plan at least a few hours, if not one night. Like, usually people trade in the morning. So before you go to bed, do your market research. Make the plan of the pairs that you want to trade next morning. For example, try 6 to 8 pairs to find. Of course, from 6 to 8 pairs at the end of a day, maybe 3 or 4 are going to work out and do exactly what you want, but still enough. So make sure you prepare the list of the instruments that you think should be fine tomorrow. Just don't try to trade without any plan. Always try to plan, because that's what really separates the winning trader from a losing. Winning trader have a plan in advance. I learned that while I was working in the first hedge fund, while I was the chief strategist, every trade I took, I needed to have at least 4 hours in advance. So if I wanted to open the Euro USD long, I needed to have a full written plan how I'm going to open that trade and why I want that trade written 4 hours before I really open the trade. And definitely this changed my thinking and improved my trading a lot. So I want you to do the same. Try to have the plan in advance before you really enter a play. The final tip I want to give you is that you should adjust your profit expectation. Market is really the great source of income, but getting to the level that you all dream, like making a $10,000 or $20,000 a month, is going to take some time, especially if you start with, let's say, $1,000 account. You can't expect to make $10,000 a month that fast and that easy. And it's much smarter that you start with small goals. For example, start by thinking about the 10 or 15% goal. So start with your idea that you are going to be happy if you make 10% every month. And once you reach that 10%, you are going to feel more confident in your knowledge about market, and your trading is going to be much better. And once you reach your goal, you can increase your expectation, but increase it normal way, like from 10%, increase to 15, from 15 to 20%, but don't increase from 10 to 50%. That's definitely not going to work. Okay, traders, I hope you enjoyed this small video. If you are not subscribed to my YouTube channel, you can do that right now, because we are going to post a lot more educational videos in the coming days. And if you are already subscribed to my YouTube channel, I hope you also enjoyed this video, and I'll see you all in the next few days. Take care, everyone.